right, mate. Let's have a look here. Sorry for the late reply. I've been stuck on the phone for 2 hours about vaccines and stuff. I'm traveling back to Australia. I need to get vaccines and stuff sorted for that. But your entry, 295. I did look at this earlier, and I thought there was a little bit of FOMO, maybe. Maybe not. It may be okay, but it's a pretty big candle, and sometimes there'll be a dip back down on a new day. Like, I would prefer to be, if it gives the opportunity, I would prefer to be buying down here at the 284 area, down into the white, the yellow 9 EMA, and that is kind of the resistance point where it broke out. So I like the 284 level better than your 295 if it would give it. What you could do is have half a position up there and buy another half a position lower if it dips back down, for example. Another thing I noticed is, you got the big move up and the drop back below the red 200 moving average, as you can see right here, and it was a bottoming process. We're kind of getting something similar, a bit of a bottoming process. Maybe it'll do this a bit more, for example, but you can see this bottoming process, and if you do get that, it allows the moving averages to come back down, and then price kind of safely got back above them and we pushed up. So, we kind of have a similar-ish situation here. If you look at this, I didn't draw that very well. Maybe I didn't, I thought I drew it better earlier. I'm not sure what way I drew it, but you can kind of see it was resistance all through here, and it came down here, and we're back into it here. Pardon me, got hiccups. So, the big question is, the $1 million question is, can these levels hold? Like, is this going to hold here? Normally, I will say that this, like, you touch here, a lot of times price will want to break back below this again. The more times you kind of touch this support, it can often fail. So the bounce here might reject and it might end up going lower. So you just need to be aware and careful of that. Let's kind of break it down in the meantime and see what we can get. So at this point in time, sand is bullish, right? It is bullish. There's no question about that. Had a nice kind of reversal stop hunt down here. Bullish engulfing candle on the 3-day. There's a new 3-day candle in 10 hours, 11 hours time. The 3-day and the weekly opened at the same time, and this is forming a bullish weekly engulfing. At this point, that'll also be a new 2-week as well, because we had a new 2-week here as well. So, I would have to say, above here, above the opening price of this, we are bullish on Sol. I don't know what this is. What's that? WinZip. I don't know what that is. WinZip, I think. So, like, the question is now, this is a bearish candle, right? There's no question about this on a 9-week. This is a very bearish candle. The question now kind of is, can this pop back up and negate this? Even if it doesn't pop back up, or can it stay green and do something like this, and then maybe, after that, longer term, it might push back up. So that is, that's what it needs. The main thing at this point, if you're long on Sol, I keep calling it Sol, but sand, it needs to stay green here. Well, that's the 9-week. You can kind of see where that is. The monthly, I think, is very, very telling. There's 15 days left, but you can just see these 3 prongs down here. To be honest, I don't really like this flat base, right? It kind of gives me a vibe that, at some point it wants to break down. If I change these to red, so there's no confusion, it really does give that vibe. At some point it'll break down, but, it is tough. Is it going to bounce first? It is bullish short term, at least in the moment. I think below 283, if price starts to fall below, we'll call it 280. If price starts to fall below that, you need to be very, very careful. And as I said earlier, if you're conservative, below 283 is not good. But the maximum stop loss you'd have to think on this is down here at the 273. If price starts to fall below these, it's a very bad sign. You want at this point for this to kind of hold up, come back, bounce into here somewhere, and continue on to the upside. You do not want this candle to be broken because it is the 9-week open. It's down into the monthly lows. It's also the lows of this large attempted reversal candle. What you're looking for here on this 3-month candle, there's 15 days left. You're looking for some sort of bounce and create a wick here. You want to see some sort of wick form in this candle in the next 15 days. If that happens, well, you might have a beautiful entry here. It might be beautiful, and then I didn't draw that very well. I flip this green. So you might have a beautiful entry, and then what if the next quarter is, say if it bounces up here, for example, up to the $4 level for an example, and then the next quarter flips green and pops back up, your entry down here could be actually beautiful. So it's a bit of a knife catch down here, right? But the lows of this candle today need to hold.